How's it going, YouTube? Welcome back to my channel. Now, if you are brand new and just stopping by for your first time, let me catch you up to speed in sharing with you that this whole channel started back in 2019, essentially to show you all through how simple investing really is when you have a process and simply stick to that process. Now, my process involved dividend investing with a goal of $100,000 in my Vanguard brokerage account, to which that account is sitting at $108,642.74. Since hitting that goal, I've just decided to dedicate essentially this entire channel to updating you on my personal portfolio, market insights, and perhaps most importantly, just sharing with you the dividend stocks that are out there that are currently undervalued. So in today's video, I want to get to it and talking about 3 rock solid dividend investments that you can get invested into that are currently undervalued. Now, just before we dive in, go ahead and tap on that thumbs up button for me. And of course, join me on the journey by subscribing if you haven't already. Now, YouTube, let's dive right in. So just before I break down these 3 dividend stocks, I want to go ahead and share what I think is imperative, and that's that macroeconomic view. So what happened this past week, whereas investor sentiment has been all over the place, this past week retailers like Walmart and Target, as well as Home Depot and Lowe's, all reported earnings. The results were mixed for the most part, but surprisingly, Walmart actually came in stronger than expected, and so too did Home Depot, which made the market rally just a bit. Now, this all clues us into the state of the economy, which of course hasn't been great, with consumers feeling the inflation pinch. Now, the latest Fed FOMC meeting minutes did come out this past week as well. Once released, they reiterated the fact that the Fed has a commitment to fighting inflation, which did in fact spook investors, because now we're all trying to understand whether or not the Federal Reserve is going to hike interest rates come September by 50 basis points or 75 basis points.
Super Bowl time. Man, I'm tired of being right.
Of course, any uncertainty there then means that the stock market will be in a state of flux. But what exactly can we do in the meantime? Well, it's looking for value opportunities that are still out there in the market, which leads me to the very first dividend stock on the day. We have VF Corporation, ticker symbol VFC. It's the world's largest apparel and footwear company, outfitting consumers around the world with a diverse portfolio of brands. A matter of fact, since its founding in 1899, VF Corporation has managed to popularize 13 brands, from Timberland and the North Face to Supreme and Vans, all brands that simply have become iconic in this world of fashion that I'm doubtful will ever actually disappear, thus placing a moat around the company. The successes of these brands have helped build VF Corporation's market capitalization up to $18.31 billion over the years. And while the market conditions, especially high inflation and supply chain matters, keeping consumers from purchasing luxury items or items like clothing, have led to the stock's descent from a 52-week high of around $76 per share to its current share price at $46.63, making for roughly a 38% change, with a PE ratio coming in at 18.4. Here I am now saying that VF Corporation is trading at some of these COVID lows and is looking like a buy to me. Apparently, insiders have the exact same sentiment, as they're scooping up roughly $1.3 million worth of shares over the last few months. As for analysts, they too are forecasting upside potential ahead, with the target share price coming in at $53.43 worth of a share price. However, it's important to note that investing into a company like VF Corporation will not exactly be an overnight lottery winning ticket, and it's going to require an economic turnaround for that positive momentum for the stock when it comes to that upside potential. But as a value investor, this is exactly why VF Corporation is actually on my list. With a little bit of patience, I think it will certainly pay off. Now, in the meantime, we will collect on VF Corporation's dividend that they've been shelling out consecutively and increasing their dividend year over year for the last 48 years, nearly making it a dividend king, with the current dividend yield sitting at 4.55%. Next up, we have a financial industry leader that has a history of delivering through on exceptional returns, yet has been battered by the market conditions since the onset of COVID, which also means that I have been talking a lot about this stock for some time now. But this stock is Rowe Price, that's ticker symbol TROW, which is a global investment management firm offering funds, advisory services, account management, and retirement planning services to individuals, institutions, and financial intermediaries. Now, after its founding in 1937, Rowe Price quickly made a name for itself, and as it stands right now today, its market capitalization is sitting at just under $30 billion at $29.63 billion. However, as a financial company, just like the rest of them, it took a beating over the years, whereas it remains at a low of $131.77 after falling from a 52-week high of around $217 per share. Guys, that's nearly a 40% drop in share price, with a PE ratio coming in at 12.8. And asking ourselves, how in the world could this have happened? It turns out that the vast majority of Rowe Price's assets are not just invested within the market, but specifically within the NASDAQ, divvied up amidst all of these growth stocks that over the years have certainly been beaten down. Therefore, amidst an economic recovery, we can expect growth over time. And for more convincing reinforcement, hedge funds have been beefing up their position with Rowe Price this past quarter, while bloggers have remained pretty bullish on the stock, and of course retail investors are feeling similarly. Now, as for analysts, they have given Rowe Price a higher target share price here of $138 per share. Now, once again, I am here to say that you can't expect Rowe Price to bounce back overnight and be that overnight jackpot. It's going to require your patience, but as far as I'm concerned, that patience again pays off amidst an economic turnaround. And until then, shareholders are going to be rewarded with a nice dividend, which has been paid out for 36 consecutive years and increased year over year, meaning Rowe Price is a dividend aristocrat with a 3.45% dividend yield. And last but not least, the biggest discounted stock opportunity on our list today is none other than Stanley Black & Decker, ticker symbol SWK, which is the world's largest tool company. And while everyone is always so wrapped up in the retailers like Home Depot and Lowe's, in my opinion, an investment in Stanley Black & Decker or the alike is a gold find, as there are all the suppliers to these retailers. Now, this is essentially the going straight to the source, the gold at the end of the rainbow. Stanley Black & Decker was founded back in 1843, which speaks to its ability to navigate through a lot of these market uncertainties and survive the test of time. Now, since Stanley Black & Decker's founding, they have brought top-notch tools to the consumers, from DeWalt to Craftsman, Paladin, and Stanley, among many more, which has helped amass their market capitalization that is now sitting at $15.16 billion. And it shouldn't be too big of a surprise that I'm about to share that their stock share price has fallen, but wow, their stock share price has really taken a hit amidst supply chain issues and moreover the same inflationary pressures from retailers not lining up to buy tools for those DIY projects, ultimately hurting their top line revenue. Now, the stock is down off that 52-week high of roughly $196 per share, now sitting at $102.47 per share, roughly a 50% change, with their PE ratio coming in at 16.9. Now, analysts do foresee a stock share price rising back to $114.60 per share, an even higher stock share price of $122 per share. But as a long-term dividend investor, I'm only continuing to like what I see when it comes to Stanley Black & Decker. And what's more is the fact that insiders are actually on the exact same page, as they invest more into the company, a little over $1.5 million worth of insider buying over the last few months, which is always a positive sign for us retail investors. Let's talk about Stanley Black & Decker's dividend, as it's a dividend king with 54 consecutive years worth of paying out a dividend and increasing that dividend year over year. We have better days ahead of us here when it comes to the stock, but until then, we are just collecting on Stanley Black & Decker's dividend at a dividend yield of 3.11%. Now, YouTube, that is it from VF Corporation to Rowe Price and Stanley Black & Decker. These are the three dividend stocks that I am highly recommending each and every one of you at least bare minimum add to your watch list. If it makes sense for you to do so, to then add them to your portfolio. But of course, always make sure to do your own due diligence. I'm by no means a financial advisor. And just before we close out, tap on that thumbs up button. It helps me grow this channel. And of course, if you haven't done so already, go ahead and make your way to subscribing to the channel as well. Love to have each and every one of you on this journey with me. YouTube, until the next video, I will see you all there.